Hello, I'm David Jones, and I thought we'd take a look at the fortunes of the US dollar and also Euro US dollar following Wednesday's latest decision by the US Central Bank, the Federal Reserve, to raise rates by a 0.25%. As expected, but we did see quite a lot of volatility, particularly when the press conference got underway. So as usual, in this video, I'll talk about some of the news affecting the dollar, some of the forecasts for the year ahead. Then we'll jump onto the charts and take a look at things in a bit more detail and see where the opportunities might be. Because I do think there's quite a bit potentially of opportunities here. If you've watched live streams from me in the past, you know I've been a big fan of this trend we've had in the dollar index over the last couple of years. And I think there are going to be some further big moves this year. Anyway, before we get into that, I'll just mention I launched a newsletter a couple of weeks ago. I send it out over the weekend. It's only one issue a week. And in that, I have a section just describing what's going on in markets. Then I have the hot market I'm going to watch in the week ahead. And there's a section on trading tips, plus a section on what am I trading. It's all completely free of charge. If you go to the website, jonesthemarkets.com, I'll put the link in the description. So on the website, if you scroll down to the bottom of the page, the sign up box for this free newsletter is there. Put your email in and you'll be on the list for this weekend's latest issue. Okay, that's it. Let's get in and have a look at the dollar index and Euro US dollar in a bit more detail. So if we go back in time a little bit, and if we go from the beginning of 2021 to the third quarter of 2022, it was a great period of time for the US dollar. We had all sorts of things fueling the dollar higher. So we had more latterly in 2022 expectations about what inflation was going to do and how central banks were going to react with interest rate raises was good for the US dollar. The Russian invasion of Ukraine in last year in 2022 clearly created a lot of uncertainty in markets, and the US dollar was seen as something of a safe haven. So that's something that pushed the dollar higher. So we had this fantastic run for the dollar up until September of 2022. If we look at it in relation to the euro US dollar is the most widely traded currency pair. We'll take a look at the dollar index, but also euro dollar when we jump on the charts. It peaked in January 2021 at 122. So €1 bought you $1.22. But by September of last year, it had slipped below what's known as parity. So in September 2022, the euro had traded down to 0.96. So €1 wasn't even worth $1. That's how badly beaten up other currencies were by the US dollar. And for the euro, that move represented a slide in excess of 20%. But things have changed since then. If we look at those lows hit in September, we've seen the euro bounce back by 14%. And just this week on that US interest rate decision, it's hit its best levels since April 2021. So the last 6 months have seen something of a resurgence for the euro against the dollar. And I do wonder, even after it having bounced back so far, could 2023 be the euro's great comeback year against the dollar? So let's think of, what are markets thinking at the moment? Well, markets are always looking ahead. Let's not forget, so even though rate rises went up this week, or interest rates went up this week in the US dollar still got hit quite hard. So all last year, markets, traders, investors, analysts were all looking ahead, looking at the threat of rising inflation, how the central banks would react by raising the dollar. So that was raising interest rates. So that was getting priced in to the dollar in effect. Yeah. So markets don't really deal with what's happening in the here and now. They're taking the view, well, what's going to happen over the next few months? So that's the question. Is all of that now all discounted into the dollar? And given the slide the dollar's had over the last 4 to 5 months or so, I'd have to say that it is. So are we going to see further dollar weakness this year? So if this is going to be a comeback year for the euro, what are the targets we're going to look for? I'll take a look on the charts in a second. But if you look at someone like JP Morgan, back in December, they were still bullish on the dollar. So JP Morgan at the end of the year think that the euro against the dollar will be trading 1-to-1. So the euro is going to drop from where it is now. I must admit, I don't agree with that opinion. And for me, at the moment, the euro absolutely looks like a buy the dips market against the US dollar. But enough talk about it. Let's jump onto the charts and take a look at the dollar index and euro US dollar in a bit more detail. Before we take a look at euro US dollar, let's just have a look at the dollar index. If you've never looked at it before, really good market to watch. And it's the dollar against a basket of other currencies. So it's a blended view of the US dollar. So this was the move. This was the trend that really started in May 2021. And I did quite a few trades into this trend. Absolutely brilliant trend. Then it accelerated from Feb, March last year, partially pushed higher by the Russian invasion of Ukraine. And we saw the dollar index peak in September of last year. And since then, we've seen this market sell off. So we've seen dollar weakness after this great run over, nearly 18 months in the US dollar. We've seen it turn around. And if I zoom in, if we have a look at what's happening today and yesterday. So we had the Fed interest rate decision on Wednesday. Saw the dollar sell off. And today it has slipped a little bit lower. So it's traded down to April 2022 levels. So 10-month low on the dollar index. And I was watching this level, let's call it 101. The lows from May of last year. That was something of a springboard for this market to move out to multi-year highs again. And I thought, well, I wonder if 101 will end up stopping weakness in the US dollar. Let's see. I think it's still an interesting area to watch over the next couple of days, the next few weeks. But for now, undeniably, that trend in the US dollar index since September last year is down. Let's flick things over and look at the euro. So let's take a look at this euro slide. So again, the euro peaked. When was it? It was January 2021, so a couple of years ago now. Up above 123. Bobbled around. We had a lower high in May of 2021. And then we had this sell-off. And the bit of the sell-off I want to pick up on, the sharper trend, is from Feb of last year, so a year ago. Let's take a look at that. So this is the trend I've been watching all the way through last year. And then we did have the first signs, October last year, of the euro US dollar breaking out of this trend. We had the sell-off. It held above the previous lows. And then the market really got moving about the middle of November. So today, at the time of recording, we've seen this market trade up to levels not seen since back here. We've got to go back to April of last year. And for me, this is the trend on the euro now. So let's zoom in again on this recovery since September. We've had this really solid uptrend now that's been going since September. The market accelerated away from November. We could pick up on a sharper trend since the third week of November. We've got major support left. It's the lows for the year so far. So earlier in January, down at 104.80. So for me, absolutely, we have a clear uptrend in the euro. I'd be a buyer of a dip. For me, even if the euro sold off 500 points from where it is now. And, given the volatility in currency markets at the moment to do with the dollar because of what's going on with interest rates and inflation, we shouldn't rule that out, the chance of a deeper sell-off. But absolutely looks like a buy the dips market to me. I did actually have a trade on the euro going into the interest rate decision. Let me show you. I came out of it this morning on a trailing stop loss. So I'd been in the trade for a while, and this is part of this account I've been trading. So I run a trading course. You can see the details on the website. And as part of the course, I traded a £4,000 account since November of last year over a 3-month period using the principles on the course, risking £100 per trade. So I came out of the euro trade today. The profit was £153. I've been in the trade for a while. That's where you can see me last night, my time, moving the stop up to a trailing stop as the euro had moved higher on that interest rate decision. So I've got no position in the euro at the moment, but absolutely looking to buy a dip. When it comes to my existing trades, that's the only one I've got for now. So I've had a couple of days off trading this week because of these major announcements coming out. I'm still long sugar. I've been long sugar for a while, but that's done well. That's up £242, so 2.4 times the risk at the moment. There's a trailing stop on that one. Let's jump back onto our euro chart. So when it comes to targets, where next for the euro? Well, I think, the potential big hurdle, next big hurdle, comes in these highs, end of March last year, around 112, give or take 20 points. So that, for me, would be the next objective for the euro. I'd much rather buy a dip at the moment. I don't have the position. If the market sells off, I'd be looking to be a buyer of dips. For those of you who are fans of the RSI, you can see down here, classic overbought, oversold oscillator. It is looking very overbought, but, a word of caution, it did go overbought back in November, and the market has hardly really looked back since then. So RSIs in strong trending markets absolutely can be wrong-footed. So for me, it's more about the trend at the moment. I'd like to see a dip. I think that could be a good opportunity, but I think no denying, the way I look at it, that trend from the last 12 months is over, and this new recovery trend still looks to be strong. I am personally expecting to see the euro move higher as the year goes on. That's it for this update. The dollar index has been a market I have really loved over the last few years. Great trends. Clearly, the US dollar is the global reserve currency. Always an interesting market to watch. But let's see what happens. I think at the moment, the risk is for perhaps further pressure on the dollar. Don't forget to go to the website to sign up for the newsletter. It will be coming out in the next couple of days. Comes out every weekend, free of charge. Go to my website, jonesthemarkets.com, and go to the box at the bottom. If you've liked this video, if you click the thumbs up to help the YouTube algorithm, and if you've come here and you're not subscribed, of course, click on subscribe to stay notified of all the content I upload. Normally a couple of videos a week and regular live streams as well. But for now, until the next time, good luck with your trading.